Is it live? 1 second, ladies and gentlemen. 1 second. I can't even tell if it's working. YouTube. YouTube. It looks like I'm live. Ladies and gentlemen of the crypto space. 11:29 a.m. on a Tuesday, December 8th. We're off to a start of the week. Yesterday was Monday. Today's the day that you work. Tomorrow's the day that you work. Thursday's past hump day. So it's it's the end of the week. It's almost Friday. And then Friday's Friday, of course. So you guys know the deal. And that's the way the week goes, day in, day out. Just saying. Today's topic, Bitcoin never needs to be sold. Equity and pristine collateral. Ain't that the truth? Incredible. Equity. Equity. Home equity loans and lines of credit. Over collateralized debt positions. All these fancy things that we're using nowadays, or at least, the folks that have gotten a taste of what the DeFi potential is this summer. I mean, there's people using DeFi this summer that are using over-collateralized lending protocols like Aave and Maker that have never had a loan in their life. They've never put a lien or a line of credit on their home. And folks probably many don't have homes, but they're borrowing from Aave, they're borrowing from MakerDAO. Ain't that fascinating? It opens new doors. This is the tip of the iceberg, boys and girls. Who's in the house? We got stuff in the house. Stelios, what's up? RR. Charlie, always a pleasure. Yes, you got your ledger. So it's not your keys, not your crypto. To get your stuff off exchanges, custody your own stuff. Now, obviously, as time goes on, there's more merit to like the institutional grade custody solutions, like the institutional grade, like serious two-factor authentication on your Gemini or Coinbase account. All right, I can see that as tempting and palatable, especially for the larger institutions. But for myself, for many people, not your keys, not your crypto, own your shit. Yeah. So there you go, my man. Woo! Rick's in the house, always a pleasure. Crypto Chick, always a pleasure. Yes. It never sell. Use it like a HELOC. That's right. Home equity line of credit. Well said. Except I mean, I guess your home could appreciate in value, but it's sure as hell not going to appreciate like Bitcoin, given its pristine collateral. I listen. If Bitcoin goes from 20 grand, give or take what it's at, let's say, it goes to 100 grand, who the hell is going to want to sell it and pay tax on $80,000? I sure as hell I'm not going to pay no tax on 80 grand. If I want some money, I'll borrow it. I'll borrow using my Bitcoin as collateral for a debt position, either from MakerDAO, maybe from Aave, probably Celsius, BlockFi. Point being, I'm going to pay off that debt position with you know what? Fiat, because nobody wants the fiat. I'm going to work and I'll pay the debt in dollars. Because what's the point? What does dollars do for me? Am I gonna? Does anyone accept dollars as collateral for a loan? But that's not besides the point. If you put dollars as collateral for a loan, the value of the dollar is constantly depreciating. And what happens if the value of Bitcoin in a MakerDAO position depreciates? You approach liquidation price. So you don't want an asset that's depreciating. You want to hold assets that are more likely than less likely to appreciate. And we all know what's going to happen next year. They're going to print a couple of $1 trillion, and come on. That's what they're gonna do. That's what they're gonna do, boys and girls. Isn't it obvious? I use my custodial wallet now. I will put 98% of it. Yeah, that's the name of the game, Charlie. And now with a ledger, now you can play around with like Uniswap, MakerDAO, Aave, RenVM using the bridge, or like a WBTC Cafe. Plenty of the stuff that I have up here. You can play around with synthetics and the Minter. You can play around with Bancor. and get some yield on a couple of assets. I mean, here's all the assets that they're providing incentivized yield for. Ethbancor, Link, USDC, USDT, WBTC, DAI, Ocean, YFI, REN BTC. Look, you could get 20% on your REN BTC from Bancor. Obviously, the yield is denominated in BNT after governance approves and all that fancy stuff. So, then you could obviously think about Curve. So there's obviously risk associated with these positions, but that's the whole point. If you keep dollars in a bank account, it's not risk. You actually have a 100% certainty of losing money. You are guaranteed. It's not even risk that you're going to lose money. And guess what? It's not even risk that you're going to potentially depreciate. You have 100% risk and that you're going to lose money with dollars in a bank account. So everyone it's beyond risk. That's a whole nother level. That's a guarantee. So folks are walking around like, oh, it's too risky to buy a stock or buy a crypto asset. Yeah, you have done worse. You have done worse than take a risk if you have dollars in a bank account. They just see it. Isn't this obvious? It's kind of obvious. I don't know. These these yield percentages are ridiculous. So folks say, how is this sustainable? So clearly it's not. There's an emission schedule. There's a max supply. But the reason why this is novel is because we're dealing with monetary experiments. Curve is an asset. It has a supply. It has a mission. It has a value. It's a tradable value. So it fluctuates, it appreciates and depreciates. And the whole point is that's where this yield comes from. This yield comes from because it's a bit of a currency, has properties of currency, and and this is the price based on the emission rate, the yield for a respective pool, and the price. My yield on provided liquidity right now is 28%. That's it. That's real. There's not like this is new. This is novel. This is nothing we've ever been able to consider before. Really, 2020. Um, this is the year of DeFi and basically the start of monetary experiments. This has never happened before in history. The only people historically that did anything like this were entire sovereign countries that had central currencies for sovereign currencies. But now we have technology and a user base and networks that allow basically any nerd with a computer to crank out an ERC-20 with an emission schedule, with some locking and some yield and some crafty incentivized supply disruption mechanisms. And that's what these are. These are financial monetary experiments, and the only thing in history comparable to them is actual countries. Um, so don't be dissuaded. Dissuaded. This is real yield, and it comes from somewhere. And I just explained in brevity. You think about that a little bit. Take a little bit to digest it, but it's real. That's the bottom line. Anyway, yes, crypto chick, setting myself up for early retirement, taking profits from staking, trading, and lending to live free. Well, the whole point is, one acceptance of really how much money it takes to secure, uh, a risk minimized retirement, or where you don't have to work, freedom, financial freedom, where you work because you want to, not because you have to. Um, and the government doesn't tell you this. There's no fucking part of the education system that tells you jack shit that's even remotely reasonable. There's no financial classes that tell you need $2.5 to $5 million at 5% yield, so you could get 125 to $250,000 a year, where your money makes your money. No one tells you that in school. You need a jerk like me on YouTube to tell you need 5% on $5 million to make $250,000 a year. Come on. How the hell are we going to get the 5 mil? Well, the Bitcoin will do it. you stack up 5 Bitcoin. The odds are in 5 to 10 years, the odds are you will have enough principal to lend your Bitcoin for a significant yearly salary. That's a reasonable statement. Um, what's not reasonable if you took the 100 grand for the 5 Bitcoin and you put it in a bank account in 5 to 10 years, the odds are you're gonna have jack shit. I mean, I guess technically that is a reasonable statement. Ain't that the truth? If you have 100 grand that you've saved up, you worked your life for, and you put in a bank account, in 5 to 10 years you're fucked. How about that? So the question that I think about always is that considering that means you have to do something. You have to take action. And the only question you have to ask yourself is, what is the best action? And you consider risk, and I like risk minimized actions. I don't like taking risk. But you have to do something because if you have dollars in a bank account, you're setting yourself up for failure. And that is just an observation of truth, disturbing as it may be. Seriously, guys, it might sound opinionated. I guess a lot of maybe financial folks, advisors would say that's opinionated, but I don't see that as opinionated. I mean, if you're going through, 10, 12% interest, inflation a year, is that a llama on Google? Are they into curve finance? So if you're going through 12% inflation a year, give or take, or whatever it is in your region, in 5 years' time, you have 100 grand, you have 50 grand, you've lost half your money. So, in fact, it's a mistake to save dollars. It's a problem. And I feel bad. I don't think the general public knows that they're gonna lose. They will lose. And I don't mean that in a derogatory sense, because I mean if you have 100 grand and in 5 years you have 50 grand, you've lost. Lost money. That's by definition what the word lose means. And what is a person that loses? A loser. I don't mean that in a derogatory sense. And that's a hard topic to talk about. How could you say that's not true? Oh, stop saving dollars and don't be a loser. You know who says that? Robert Kiyosaki. Savers are losers. Ray Dalio, cash is trash. This is real. This is real life, folks. It's not kids. It's not monopoly money. It's not your daughter. I've got 2 daughters. Not your daughter with the cash, the plastic cash register, and not playtime. This is real cutthroat capitalists that they have no interest in doing anything for you at all. This is you get what you get. If you got it, you got it. If you didn't get it, you're a loser. And if you win, you win. And this is my older daughter, 6-year-old, gets upset and she cries sometimes when she doesn't win and she loses. I think that's the most important lesson that I think about often to teach my children. There's nothing wrong with losing. The only thing wrong is not each time getting better at it. It's okay to lose, but fuck that. Beat the shit out of it. Win. Get up. If you lost and you get up and you go on to the next thing, you've won. You've turned the loss into growth and experience. Man, that's the best lesson. I think about that all the time. And so if you think about that, there's no such thing as losing because the loss is a win if you learn from it. How about them apples? How about them apples? Bam! Yeah! Thank you, Crypto Chick. That was a good influencer award. I've got that over the last couple of months, a couple of times. I think it was down in the 20s at one point. I don't know. It depends on Twitter sentiment, social media sentiment. I try. I like what I do. I like helping people. It's not This is not a business. I don't make any money doing this. Maybe this is a psychology session for myself. And you guys are my psychologists. Welcome to Noah's psychology session. That's the plan, baby. Woo, Charlie, yeah. I'm making my crypto work for me. That's right, John. It could be you saw it does. So we say it like that because that's what we're exposed to, making my crypto work for me. What we want, it's not just crypto. We want assets that work for us. There's a lot of folks on Twitter that talk about dividend-bearing equities, REITs, and shit like that. That stuff is cool. The problem is, anytime you're touching anything in the legacy financial system, you're not betting on that company. You're not betting on Realty Income Corporation with Big O because their P&L, their earnings, their P&E, it's meaningless. It's meaningless. The fundamentals are meaningless. They have nothing. They're fake because if the central bank, the Fed and the Treasury lose control over the financial system, everything is destroyed. So you're not placing your money in a company. You're placing your money in a bet on the central bank keeping the system alive. With M2 blowing up and velocity crashing, this is a system that's on life support. So I don't trust it. I have my equities because I have my equities, but man, I don't trust it. And it's a hard pill to swallow. Why do I have my equities? I think about it often. You guys know I double think myself to extremes. I have my gold miners, silver miners. I got gold, which has been beaten up horribly. I don't know. You can't go all in, can't spread too thin. And at one point I wanted those dividend bearing. I had a portfolio of like maybe 30 different dividend bearing instruments, and it was nice until the equities market got obliterated. And now I'm just so disheartened with the legacy financial system, which does produce a bias for me to place value in the crypto space. And if you want to be risk off in crypto, you are in Bitcoin and Ethereum. That is risk off. Risk on are assets that are not macro scale. Macro scale in the crypto space is Bitcoin and Ethereum. They are the large players. That doesn't mean that there's other assets that are incredibly or to be avoided. The other ones are risk on. They're increasingly volatile. They have smaller market caps, and obviously the have increasing asymmetric return potential, which is exactly what happened this summer. It's a big deal this summer. Woo! Facts, Charlie. That's facts. Plus, you got to worry that they'll let you withdraw it. Yeah, I don't trust centralized exchanges. I don't trust banks. I don't trust them. I don't trust anyone. I trust my wife and my two daughters and family. I don't trust anyone else because this is capitalism. You get what you get. It doesn't matter how you got it. As long as you got it, the job is to hold on to it. And that's capitalism. It's cold, it's dry, it's cutthroat. They will fire you. Your job will fire you. They have no reason to keep you. They have no need to keep you. They will find someone that will work for less than you get paid, and they will fire you. That is capitalism. And that's happened to me with my work. So always have a plan, always have a card up your sleeve, always have something in your back pocket, always be prepared. Expect for the worst, plan for the worst, hope for the best. You should be waking up every day fearful that you will be fired today. And the trick to that mental state is not insecurity, but preparedness. I am prepared every day to be liquidated, to be no longer needed by the company. That is my goal, especially with a family, mortgage, home, whatever, all these debt bills. I have to be prepared. That is my responsibility. I don't live my life in fear. and insecurity that, oh, my company, I need my company, I need them so bad. Fuck that. I don't need shit. I need my head, and with my head I could convince anyone to employ me because I could do meaningful work for anyone in this country, work that is profitable. Anyway, whatever, I digress. I yell also. Wife says I'm belligerent. Yeah, Angelo, you make a good point. The hard part is making money in the first place. Unfortunately, it is a chicken and the egg. Once you have money, money makes money. If you don't have money, you have to get those asymmetric returns. If you have $1,000, it's much harder to go from $1,000 to $100,000 than it is to go from $100,000 to $1,000,000. It just unfortunately is what it is. $100,000 to $1,000,000 is 10x on your money. $1,000 to $100,000 is 100x on your money. So these are big numbers. These are big deals. That's just I don't have any magic there. It means start now, and you get your bull run this time, and then you'll have another bull run in a couple of years, and then in 2030 you'll have another bull run, and each one you learn. And most of my experience comes from like 2015, 16, 17. I didn't have anything back in 12, 13, 14 when there was some serious crypto action and everything. I was barely out of college back in the financial crisis. Graduated in 2006 from college. So you have to learn. That's all you can do. And there's always another opportunity. There is always another opportunity. There is always. So don't worry. If you miss this one, you're prepared for the next one. Um, so well said, Angelo. Uh, Robert Kiyosaki, no, they call people losers. No one holds so it's not to be derogatory. He doesn't mean it derogatory either. It's by definition. Isn't that the truth? If you don't win, you've lost. And a person that loses is a loser. Sorry. You know? But I explained why it's not a bad thing, and a loser can be a winner instantaneously by learning from the experience, which is pertinent. Um, Stelios, it's like buying an apartment and renting it to auto pay the mortgage. Yeah, you want some yield, baby. Woo! Economic Ninja, you rock. Thank you. Thank you. I try. Angela, exactly. Haha, well, we are your PS, my psychologist. Oh man, I'm far behind on the messages. That was something I said a while back. If I never withdraw to a bank and I just trade in dexes or exchanges, how can the tax office find me? Okay, so that's a good one. Um, as of right now, they can't. They don't have policies, procedures. At some point, they will be able to. They should be able to correlate like an exit address from a centralized exchange, your fiat on and off ramp, and track down addresses that are likely associated with you. The odds are we're going to see legislation in the coming months and years that require centralized exchanges, fiat on and off ramps, for you to self-identify and declare your addresses as yours. So, if you withdraw an asset, if you withdraw Bitcoin from Gemini to a Bitcoin address, it's not necessarily your address. You just send it to an address. But if you enter an address and you click a checkbox that says, I declare this is my address, you have declared it. So the odds are that's what the type of legislation we're going to see in the coming months and years. That's just an observation of logic and reason. And that way, the IRS has documentation or substantiation to associate capital gains in uh, what they call non-custodial accounts, where your addresses are called non-custodial accounts, where they can associate capital gains in such accounts with an account at a registered financial institution, therefore associated with a taxable tax ID, your social security number, or an EIN, whatever. So I don't think they have a leg to stand on right now, but that doesn't mean you have to be prepared and you have to understand what's going on. If you take money from anywhere and move it to a centralized exchange, you're probably going to have capital gains, either a loss or a gain. And frankly, you should pay. That's that's the legitimate tax. If you bought Bitcoin at 5 grand and you moved it onto your own ledger, and then at 20 grand you move it back onto Gemini and you sell it, you owe tax on 15 grand. And frankly, even I agree with that. I think that that's okay and that's very reasonable. Now, the gray area right now, I think a lot of people are contemplating is if you bought Bitcoin at 5 grand, you moved it onto your ledger, you traded it, you converted it to WBTC, you move it into Compound, you borrow 30% of it, and you move 5 grand into Curve, and you're getting 30% on your 5 grand, and you're accumulating CRV, and all that's this DeFi insanity, which you're never going to get any tax documentation, 1099s, whatever, from these companies. They're not companies. These are DeFi projects and protocols. So how do you even manage taxes associated with that is a very complicated question. But from an IRS perspective, how do you even enforce it if you don't even have a causal relationship between a registered financial institution, a person's account, and a non-custodial account? You need declaration. People need to self-declare their addresses and state that this is their address, and then they have that causal relationship. That's just my opinion. I'm not a tax advisor. But think about these things. These are very interesting topics, and I firmly agree with paying taxes. I just agree paying taxes that are reasonable. And I promise that I will always pay reasonable taxes. Will always. Period. So Gemini, if I have assets that there's capital gains and I'm moving stuff into fiat and I want to take profit in fiat, I'm going to pay capital gains tax. That's the bottom line. Spit that fire. No, I try. Self-sovereign, but that's a good phrase, crypto chick. Self-sovereign. I don't need anyone. I don't want any help. Although I do ask for a little bit of tax advice every now and then. But otherwise, I can figure everything out on my own. I'm sovereign, not dependent. Imagine they force us to declare our address and make us pay past capital gains. Yeah, don't declare that address. There's also a history where the IRS can't look back. I think it's like 5 years, maybe something like that. Don't quote me on that. Houses haven't lasted the market more than 1.5 weeks. Yeah, Charlie, the damn housing supply. You know why? Because nobody wants dollars. And this is exactly why the equities market is it's a melt up, because you can't put it into bonds. Have no yield. Treasuries have no yield. You're going to lock up $30 million at what, a 0.5%, or 1%, or whatever the stupid treasuries are? No. So there's only one place left to put, big money, and that's the markets, the equities markets. So you can only imagine, and this is what Paul Tudor Jones said the other day on Yahoo Finance, $500 billion market cap. He said this is the wrong market cap. It's wrong, because you can imagine if one pension fund moved like $500 billion or $100 billion or something crazy, all of a sudden the market cap for crypto expands. It literally just expands, like in multiples. Everything changes. And that's what we need, because how are we going to keep piling into equities? It's the most inflated, ludicrous allocation of value I've ever seen. I would never I don't know who in their right mind would buy a share of Tesla right now. You got to be out of your mind. No, you're not out of your mind. You got to have no idea whatsoever what you're buying. You've got to have no idea. That's the only explanation. You have no idea what you're doing. You have no idea what the Fed and the Treasury did this year. You have no idea of macro. You need to watch Real Vision. You got to understand a little bit of this complicated system. Because if you buy a share of Tesla, you're not buying Tesla. You're not buying Tesla. You're buying a share in basically central bank stability. The central bank can keep the system stable, fine. It keeps going up. That's what it is. There's nowhere else to place money. Of course, it's going to keep going up. Anyway, um, Stelios, you don't need. That's the thing, and that's the interesting thing. And just because it went from 20 grand to 3 grand back in March, over the last couple of years, of course. Doesn't mean it's going to go from a half a million down to 100 grand or half a million down to 50 grand. There is always there's always not a chance, but there's more likely than less likely the case of a paradigm shift at some point, and that's now because of the global macro environment, the financial environment, the CBDCs, the whole financial system for the planet is going to change. And Bitcoin fits into the macro financial narrative like no other asset, or at least nascent new asset class in history. This is some serious, like once in a not just generation, once in 100 years, once in a lifetime type shit going down, boys and girls. Seriously. Yeah, and also you see selling your Bitcoin, you got to pay taxes, so don't sell it. Just get yield on it. If I got a couple Bitcoin. You guys have seen what I have in Oasis. If that 7.5 is worth like $1.5 million or whatever, or dare I say $7.5 million, or if Bitcoin goes to $1 million, I'm not going to sell any of it. But I sure as hell I'm going to try and get 3 to 5% on it. And that way I have no capital tax, no capital gains tax applicable. I didn't sell it. Didn't sell it. I got gains on it. I owe tax on those gains. I owe tax on those gains. Um, Unless if I put it on a Visa that can pay with crypto. No, yeah, but that's all questionable because the Fed and the Treasury. This is why those crypto debit cards are quite questionable because they would argue that the conversion, and it's likely the case, the conversion of crypto to fiat at the time of purchase is a taxable event. So the IRS is going to try and take their money. And that's the bottom line. Yeah. Um, Registering an address as yours if you withdraw from a centralized exchange. Well, obviously, if you did it now, there's only anecdotal relationship. That's just what it is, and that's true. There is no way to know that an address that I put in is mine. It could be a friend's. I could have just given it away. It could have been a charity. I have no idea. No idea. The odds are the addresses I've put into centralized exchanges are for a product I purchased, I don't know, on overstock.com, or it was a charity that I donated to. Who knows? Just saying. Would it be a good practice to have separate ledger wallet exclusive to use for DeFi and ledger wallet? Well, you're not going to be able to get your asset off of a centralized exchange without inputting an address. So it's not about, having something or a separate ledger. Um, these are complicated topics, and I'm far from a professional at fully understanding all the nuances of it. And in fact, the IRS is going to come after everyone and anyone that they possibly can. And a lot of my thoughts and ideas are speculative at best. But the point being, I argue that we need to pay taxes if you have any capital gains for assets that are moved off of a centralized exchange and then back onto a centralized exchange. I think they're going to go for the declaration, forced declaration, declaring that the address is yours and you're registering it as your address. And I think that makes logical sense as something that they're going to put forth as a policy, an official policy. That's the regulation. And bear in mind, when they have that, that changes everything. Now you have the fringe financial system, the crypto financial system, that's turning into the real financial system, and that's acceptance and adoption. Uh, well, decentralization, it's not really decentralization, but you know what puts the government out of business? You know what puts the legacy financial system out of business? Better. That's it. It's as simple as that. Better. So as of right now, 2020 has proven that there is better. There's better than the legacy financial system. There's better than a bank. In fact, a bank is a mistake. Chase, HSBC, name your bank. It is a mistake. The only thing that bank offers you, only thing that bank offers you is convenience. Maybe security, but they're not even holding. You're not. So you've got to put your money in a bank account to secure your dollars, and they're not even holding your dollars. They literally take your deposit and get rid of it right away. They're not even securing your dollars. The only thing a bank is there for, to secure your money, isn't even securing your money. This is crazy. The banks are deprecated. They're done. They're done. 2020 has proven it. They're done. They have nothing useful to offer the customer. They are useless. In fact, they're a burden. All right, I rant and rave. I yell sometimes. My wife says I'm belligerent. I'm sorry, but thank you all for being my psychologist for the day. I appreciate it. 12:05 p.m. on a Tuesday, December 8th. Smack those thumbs up buttons. Tell everyone to subscribe. 35 more subscribers, and we hit 1,000, and we get the super chat. 35. We can do it, ladies and gentlemen. Thank you very much. You all have a wonderful day, and I will see you tomorrow. Peace.